I see the government in the market every day. So we're looking at a 7,555 Dow. It's on support, within 200 points of support. And it only was there once, and then once in November, a couple of months ago. I think it'll break somewhere between 6,000 and 6,600. It could be down to 5,500 by the end of the year. Next year, 3,800 to 4,200 is reasonable. And the stimulus package will mute things a little bit, but won't be a big help. I got a report today showing that the banks increased lending 1% after receiving all that money, and these are the ones that received it. And that was in credit cards, which is their big, interest money-making operation, not in business loans nor in lending for housing. And so I think they'll need another couple of $1 trillion for the banks, and next year, January, they'll have another stimulus package, another $2 trillion, and inflation's going to rage. And going into 2010, the gold should be up over 3,000. Silver, probably $100. I don't know, and we'll just have to wait and see. But it's going to be high in price. You have to be careful what you say because different people get different connotations of words. But anyway, that's question one. Question two, do you see suddenly going off a cliff? I don't think so. And this was from Chris, incidentally. And could happen, but I don't think so. They're trying to massage this thing down. It's all planned. They don't want anybody to discover what they're doing. And so consequently, I don't think you'll see anything falling off a cliff. And, Melody, it's all yours.
It's all mine.
Woo!
Well, I guess we'll just start at the top and work backwards.
Gold's up $18.50, silver's up 30 cents. Go ahead.
Oh, I'm sorry. That one is looking for coin prices. Let me move on to the next one. With all the bad news coming from Poland, Hungary, Ukraine, the Balkans, the Baltics, can the IMF keep bailing out these banks, and can the euro survive this onslaught?
No. And I tell you, what I think is going on right now, and I'm only guessing, I think that the members of the IMF who have pledged their gold to the IMF, I think that they are selling it into the market in behalf of the IMF to get them more money. That's what I suspect. Because there was a question today about 40 tons that Japan bought, and I think it was a wash trade, which means they put in a bid and an offer, like $1 apart, like the gold traded when in fact it really didn't. And I think that was their contribution, and I think that's a tip-off. I'll know more about that when I read more about it. I got the information just as we were coming on the air, and I didn't have a time to rip it. And so I'll be back on that, but I suspect that might be what's going on. And I'm seeing more and more reports from people who normally don't get into this, the Illuminists, the elitists, and what they're doing behind the scenes. And they're talking about the ETFs, which is GLD and SLV, which is gold and silver exchange-traded funds. And more of them are talking about the fact that they think, and I do too, that both are engaged in using derivatives. And that means that they're not buying gold in the market because it's not showing up anywhere, nor the silver that's purchased, but particularly gold. I mean, we can't see anywhere where there's large amounts of gold being bought. So where are they getting it? I don't think they are. I think they're using derivatives. Now, if you got derivatives that are being written up and sold by J.P. Morgan Chase, supposing J.P. Morgan goes under, and that is possible, you got 100% of nothing.
You all right, Bob?
No, I died. Oh, yes, I'm okay.
Now I got to do the whole show.
Well, you're a righteous woman with all the righteous answers, and you'll have no problem.
Well, thank you. Well, I'm glad you're back. How was the trip?
Well, it was only a fraction of a second. It's dry here, and the dust, it gets in your throat. That's what that is.
Yes, I know.
Yeah, it's dry this time of year. The jungles are just parched.
Are you ready, or would you like to take another break, sir?
Oh, goodness gracious. I can't even answer that.
Okay. Moving right along here. The European Commission has taken disciplinary... Well, I wanted to say something about that IMF. They've been talking about for 2 years now that they were going to sell their gold, and, that they had. And, of course, that was all lots of rumors, we thought, in order to, keep pressure on the gold prices. So, but now they really need the money, so they could be selling it off in little increments because they don't want to flood. They don't want to flood the markets to drop the price now that they have to sell it at this. They want to sell it at the higher price. Wouldn't you think?
Well, they could be supplying GLD, the ETF, as well, and we don't know that. I mean, they lie about everything. The World Gold Council is just full of aluminous. And it's always been that way. And so they're not on our side, they're on the other side. So maybe the IMF is a seller through the people who have pledged their gold, countries that have pledged their gold. Could be. And so we'll find out later, but it doesn't make any difference.
No.
Normally 80% of demand for gold comes from jewelry. I don't know what it is right now, but I'll guess at 40 or 50%. Let's say 40. So it's all investment demand. This is a flight to quality. This is gold. It's decoupled from the dollar, decoupled from oil and commodities, decoupled from all the other currencies in the world. It's on its own. It's the only currency. And this is why I bang you over the head 3 times a week on this program and telling you you've got to buy no matter what the price is. This is going a lot higher. Don't think. And I just got 3 letters and I answered before I came on the air. Should I go short the dollar, or should I go long rubles? And, why go... Hello?
Yes.
Why go and do all those things when you get the greatest bull market in the history of mankind in gold and silver? Why mess around? You're not a professional trader. Don't get involved in that. You're going to lose. I've been there. You're not a pro. You're going to get your head handed to you. Go long gold and silver-related assets, and you don't have to worry about it. I occasionally get a letter from somebody that says, oh, gold is too volatile, so I sold. I sent a note back. I said, that's terrific. Goodbye. Some people don't get it. We've already made people a fortune. And it's going to be 5 times more than what we've already done. Go ahead, Melody.
I get questions, too. Bob, it's like they're just not patient. They want gold to go to 8,000 tomorrow. And, they're so accustomed to seeing the manipulation in the paper market that they expect gold to do that. And gold will have its time, and it probably will do that in a very short period of time. But I get those questions. They're just looking for the quick buck. There is
no quick buck anymore.
No, there isn't.
And, I had a guy on today in New York, and he's long everything in gold. And I said to him, look, let's say that gold never went $1 higher. It stays right there for the next 10 years. Do you realize everything else is going to get down between 60 and 100%? You're going to be the only winner, even if it doesn't go up. No, I think it's going to go up. So you're going to be 5 times better than being a winner. You're going to get filthy rich. He said, you're right. And I am right. So buy and hang in there. Go ahead, Melody.
But you know what? Sometimes it's not so much even the customers, because when I ask them, what do you want, profit or do you want to keep what you have? 99% of them say, I want to keep what I have. But yet they hear other people, other programs, and they're very convincing in the pie-in-the-sky profits that they can obtain from one section of these markets or another. And it's easy for them to get caught up in these promises of these double-digit returns. But yet, if you ask them what they really want, they want to preserve their wealth. But you've got some tough salesmen out there.
Well, let me tell you something. We've just seen perfect examples of too good to be true, and it is too good to be true.
Yep.
We had Madoff for $100 billion, and it's not 50, it's 100. Now we got this other guy, Stanford, who's in hiding someplace in the jungles of Antigua,